So I want to talk about a couple of things here in this video. First and foremost, I want to look at some of the FTD numbers for the month of June. It looks like AMC for the whole month of June had about 86.65 million FTDs. This is insane, okay? This is on a whole nother level. In the last 5 trading days in June alone, AMC had almost 60 million FTDs. There's a lot of phantom shares out there. What should you need to know, and what ultimately could happen here? Now, on top of that, I want to talk about Apple and Amazon earnings, as well as what could happen tomorrow in the markets, because we do have economic data. So if that sounds exciting, well, that's great. Hit that subscribe button, as well as the like button if this is your first time to the channel. Thank you for tuning in. The almighty YouTube algorithm has certainly blessed you here today. So AMC's FTDs. Now, why this is a big kind of topic of discussion. Couple different things to know when it comes to FTDs. When there is FTDs, this means naked shorting has been taking place. A small amount of FTDs are somewhat to be expected on any given stock. In the thousands, maybe the low millions. This is kind of as to be expected when you're dealing with market makers and you have options. Right. There's not always just enough shares out there to get your hands on if big strikes start to go into the money, out of the money, etc. So there is a logical explanation to get some degree of FTDs, but not the kind of numbers that we're seeing. So for AMC, in just the last 5 days of trading, you had about 60 million FTDs. Last couple days of trading in June, the last 5 days, almost 60 million FTDs. For the whole month, you had about 86.5 million FTDs. For context here, NEO had 5.88 million FTDs, which this makes a little bit more sense since that's an ADR. Apple had 1.92 million FTDs. And Tesla had 2.26 million FTDs for the whole month of June. Not just the last 5 days, the whole month. And AMC had 86.65 million. AMC had more than 40 times the amount of FTDs than a stock with a $3 trillion market cap had. FTDs are more common in thinly traded stocks because, again, think about it in the options analogy. If you do have a stock that's thinly traded, maybe it has a low float, and you see a run up in the share price of the stock, and there's a lot of people with calls, a lot of people exercise those calls. Market makers maybe can't get their hands on all of these shares that you are entitled to at your certain strike price. So then they have to go out and say, hey, well, we're going to give you these IOUs. We're going to search for these shares. Once we got the shares, we'll give you back real shares and essentially dissolve the IOUs. Okay, makes a little bit more sense in a thinly traded stock. Not in a stock that sees in between 10 and 200 million shares trading hands every single day, like AMC. Now, if you want to use that comparison, again, to Apple, 40 times the amount of FTDs, over 40 times the amount of FTDs AMC had in the last month compared to Apple. That's pretty big. Now, the other thing to know is FTDs create phantom shares. So the best way to think about this is pretty simple. If there is 530 so million shares outstanding, but you have 86 million FTDs, well, that has a dilutive pressure on AMC stock because the real float at that point is over 620 million. Different than that 530 so million. So that just simple supply and demand helps bring down the price of AMC. Now, when you're sitting at an FTD level that is record breaking, like what we're seeing now, and those FTDs do come down, that's going to kind of have the effect of like a share buyback, right? To AMC. This should be positive. And by now, you should have FINRA and the New York Stock Exchange fully aware of this situation. There should be no questioning. We'll see ultimately if any public news comes about that. But that could be a reason. It could be a little bit of a reason why AMC stock did outperform so heavily on the day today. AMC stock was up 2.5% in regular trading. So that is important to know. Pretty much flat in after hours as well today. The stock's currently trading at $4.91 per share. If you start to break out above $5 per share, that's where things start to get a little bit more exciting for AMC. And that's where potentially you could see an even bigger upside move. So definitely watching that. Definitely keeping that on my radar. Now, as far as what we can expect going ahead into the future. Easiest thing to know, best thing to know is number one, if you maybe didn't have call exposure back here, maybe you wanted some option exposure in AMC and you didn't have the chance to do so before the last court proceeding, the last court ruling. Well, now it looks like a pretty decent time to get your hands on some exposure. Not a financial advisor, not a financial planner. Do what you guys want to do. But it looks like something is going on here. It looks like the stock is outperforming. It looks like we might be getting ready for some good news. If that's the case, well, the stock could rally substantially from here, right? As you guys know. Probably the most optimistic thing would be AMC raising capital some other way and just deciding not to do this reverse split. That would be like the home run. That would be the best case scenario. I don't know if that's going to happen. AMC just seen its record admissions revenue numbers, so it's possible they could figure out some other way to raise capital. I wouldn't bet on it. But it looks like something positive might be around the corner based off of the price action that we've seen today. what we have seen in the past couple of days. Nonetheless, nothing matters until we get the next court ruling, and that's the most important thing to keep in mind. We're subject to whatever the courts want to do ultimately. Now, if we take a look at the earnings calendar, we'll go ahead and do this. We had Apple and Amazon earnings today in after hours. Now, Apple earnings fell 1% year over year for the third earnings in a row that are negative year over year. Apple would be in a classified recession if that was applicable to single stock. So Apple fell in after hours about 2%. Now, the market weighting of Apple alone, that's going to bring down the NASDAQ almost 20 basis points. Fancy way of saying 0.2%. Almost 0.25%. But it's being offset by Amazon earnings, which were great. And Amazon basically beat top and bottom line. They guided up, very optimistic. Amazon rallied in after hours, right? So, and I did kind of warn about this, that I was a little concerned about Apple. Amazon might be getting to kind of the end of this kind of goods recession, and things might start to look better for Amazon. And that's exactly what they gave us, and the stock reacted appropriately. Now, I don't think it's Amazon or Apple earnings that are actually driving the futures currently higher. I think it is obviously with Amazon, that is important, but I think it's sending the signal that the consumer is doing okay. And that's why the NASDAQ is up 0.59%, the Dow's up 0.25%, and the S&P is up almost 0.5%. I think that's the important part to pull out of these two stocks. Now, as I have said before, big tech earnings was the thing that could have crashed the markets. Your Googles, your Microsofts, your Amazons, your Apples, right? Alphabet, Google, same thing. Those stocks were the ones that could have crashed the markets. Didn't happen. Until we get really bad economic data, it doesn't look like that is going to happen. Now, tomorrow's data could be important. Now, the unemployment rate for the month of July, we're getting that data at 8:30 in the morning tomorrow morning. And if this number is too high or too low, you're going to be in for a problem, but specifically too high. Now, back in 2022, we've talked about this before, but bad economic data was great for the markets. The markets ripped. The markets loved it. When it looked like we were going into a technical recession and we were in one, markets loved it, okay? That was the first bounce you kind of had a little bit in March. and towards August. People loved it. Recession, perfect. Buy stocks. Very, very much ass backwards at the time. Well, now you want to see a good economy because inflation has fallen. And it's fallen by quite a bit. So the unemployment rate is expected to be 3.6%, like I said. If this were to come in 3.9% or higher, you're going to be in for a problem. 3.7% is the highest that we have seen for the last year. If you take this out a little bit further, back to 2021, back towards the end of the year, you were at about 3.9% for the unemployment rate. If you break out above that, or you at least get to 3.9% or maybe even 4%, you're going to be showing a sharp uptick, month over month and especially year over year in inflation or in the unemployment rate. And that's going to kind of be a sign of a hard landing as well as that recession, right? You don't want to see data that points to a recession. That's the last thing you want. Odds are, my estimate, unemployment rate comes in at 3.5%. It actually drops 0.1%. Now, non-farm payrolls can be even more volatile. You're expecting around 200,000 for the non-farm payrolls. We just got the ADP employment change earlier in the week. That came in at 365,000. That tends to have a correlation to the non-farm payrolls. So that came in so much higher than expectations. I believe expectations was 175,000 for the ADP employment change. Based off of those numbers, the non-farm payroll report could come in over 300,000. I think that's okay. I think adding more jobs now is okay. But it's a fall potentially that would be negative. If we're expecting 200,000 job ads and it somehow came in at like 100,000 job ads, although this data is revised so much and you never really know what the final number is for like months later, that would be a really negative sign. So you want to see this data come in better than expectations rather than worse. Obviously, this is not like 2022. So this data tomorrow, going to be very important, but we do have a lot more economic data still to come until the next Fed meeting, and that's ultimately going to be important. But keep in mind, the markets don't care as much about the Fed anymore as they care about a recession. So on one hand, I want to say it's not as important because we do have another read of all of this data until the next Fed meeting. But if you see signs of a recession forming in this data, that's what would destroy the markets right now. Markets are not expecting a recession with the S&P trading at 22 times next year's earnings. That's expensive. You're talking like 25 times this year's earnings. Very expensive. So if you start to see that narrative creep in, you're going to be in for a bit of a problem. Now, again, with AMC, none of this matters until we get the ruling from the courts, and that's ultimately what's going to drive the stock up massively from here or not. Now, I would never rule out the fact, like I said, AMC does pull pull a rabbit out the hat and just cancel this reverse split if they found another way to kind of raise capital. I wouldn't bet on that, but it's starting to feel like maybe that's a possibility with all the backlash they have been getting in the courts. Just a quick update, live short interest off free float at 30.19% and 156 million shares that are currently sold short. Option activity that we've seen on the day, 31 orders totaling about $20 million with a positive order value of 4%, guys. So that is going to do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.